Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Wednesday, March 19th. Participants looking for a follow-through move to Tuesday's huge advance were sorely disappointed by the end of Wednesday's trading. The move did not happen, or at least it did not happen much beyond an early uptick that was driven by Morgan Stanley's better-than-expected earnings report and word from the Office of Federal Housing and Enterprise Oversight that it was relaxing its excess capital restrictions on Fannie Mae and Freddie Mac to foster increased liquidity in the U.S. mortgage market. The opening gains quickly evaporated following a broad-based sell-off in the commodity arena that hit gold hard. The yellow metal plunged $69 or 6.5% to $939 per ounce. Oil was another notable loser, falling 4.5% to $104.48 per barrel after a government report showed a build in stockpiles. Altogether, the CRB index declined 4.1%. Heavy selling of the commodities evoked fears that it was more than simple profit-taking after some big gains. Rather, the drop in prices combined with a rush of buying interest in the Treasury market that was concentrated on the 3-month Treasury bill engendered a sense of angst that it might be some forced selling by hedge funds looking to deleverage or needing to meet margin calls, hence the flight to quality into Treasuries. Strength in the dollar amid the weakness in stocks and commodities supported the deleveraging notion. In any event, it was remarkable that the yield on the 3-month Treasury bill dropped 27 basis points to 0.61%, marking its lowest yield in nearly 50 years. A Bloomberg.com report that Merrill Lynch is suing XL Capital Assurance over default protection on $3 billion of collateralized debt obligations added to the angst that led to a negative finish for all 10 economic sectors. In fact, the major indices closed at their worst levels of the session. The basic materials sector, which dropped 6.3%, led the list of losers, followed by energy, down 5.4%, and technology, down 2.8%. As one might expect, the defensive-oriented healthcare and consumer staple sectors fared the best on a relative basis, with declines of 0.5% and 0.6% respectively. I'm Pat O'Hare for Briefing.com. Thanks for listening, and have a good evening.